Hey everyone, I want to thank you for having me. It's such an honor to be with you all here today. Just a little bit about myself. My name is Abel Travis, for those that don't know me. I've been in the insurance industry for really, for nearly about 2 decades or so. And, I host the Insurance Innovators Unscripted podcast that's dedicated to insurance and insurance innovation. I've had experience in underwriting and leading product divisions and leading large technology initiatives and running insurance companies. Also as the chief underwriting officer. But I gotta tell you, one of the things that I personally am most proud of is the work that I've done around diversity, equity, inclusion, and how that relates to innovation in our insurance industry. And really, when we bring those things together, creates the right environment for success across our great industry. Now, I want to spend some time with you today focusing on a few main thoughts around diversity, equity, and inclusion and belonging in this insurance industry. Because it just reminds me just a couple of months ago, I was recently discussing this topic with an executive in our industry, and the response that I received was, Abel, why are we still talking about DEI in 2023? And, as you can imagine, I was heartbroken to see that many in the C-suite are still coming to grips with the value that diversity and equity and inclusion, just drives across our great insurance industry. So as we through the discussion today, there are really three main thoughts that I want you to walk away with, just from this discussion. And even if you don't remember anything else that I say, I want you to walk away with these three thoughts. The first one is that technology has changed the way business in the insurance industry is being conducted. So the industry must embrace diversity, equity, inclusion, and belonging because it is good for business. When we think about how leaders have to treat diversity, equity, and inclusion, leaders must be bold in championing championing DEI across their own organizations. There are opportunities to deploy DEI investments across the entire industry, and leaders have to be bold in ensuring that they take those opportunities to be champions of DEI. And then also, just that third point, if you don't remember anything else, remember this last point and with the other two, there is still room to embrace DEI across insurance and insurance technology. The talent war that's going on right now is going to dictate who ultimately succeeds in this space. And I got to tell you, embracing DEI is going to be foundational to the growth and sustaining a competitive advantage for your organizations. So, when we look at some of the trends in the technology advancements that we're seeing in the space, there's a lot of trends in technology that's going to require the insurance industry to have a much more open mind to embrace diversity, equity, and inclusion and belonging. Because when you think about the problems that we need to solve, those problems are greater than they've ever been before. Think about those new technologies, right, where they're being introduced and that have been introduced over the last 5 years in the insurance industry and just across the insurance value stream in general. Things like artificial intelligence that's been deployed across all parts of the insurance value stream, right? Where there's immense amounts of digital data that's going to require advanced algorithms and, just artificial intelligence to make sense of it all. Their efficiencies are being created. When we think about those efficiencies around that's being gained through things like process automation with robotic process automation and natural language processing and, bringing across that new wave of efficiencies in insurance. And even with that third point in terms of the technologies that we're seeing flow through the value stream, where it's taking that localized and granular data that's being leveraged across things like rate making and underwriting and even things like claims management. As I say right there in front of you, everything generates data, but when evaluated, it's going to provide an unparalleled view of the risk that we're taking on as an insurance industry. And, third-party firms are out there, they're emerging and they're specializing in capturing and managing that information. And that's going to really help to provide granular insights to agents and insurance companies and customers, right? More than what you would get in standard submissions to help to support that pricing and the underwriting process. And those are just a handful of technologies that's really being driven towards our industry. But now what I want to do is just take a look at those same technology advancements and look at those examples from the perspective of a DEI lens. So now think about that first example that I talked about with artificial intelligence being deployed across all parts of the insurance value chain. I'm sort of remembering back to a study from the World Economic Forum that was produced in 2022, just last year. And what that study stated was that bias in AI relies on flawed information that reflects historical inequalities, right? And they may have discriminatory impacts on a certain group of people that are being impacted by those biases, right? You know, with things like AI, especially when it's being trained, bias generally reflects the viewpoints of those individuals that's behind the training and that's behind that intelligence, right? And in insurance, that can result in things like much higher premiums or even less accuracy in the business, right? Especially impacting those that just don't have the wherewithal to afford the higher premiums that that bias can create within this insurance space, right? You know, when we look at that second point around efficiencies that are being gained through things like process automation, you know, when we go back to 2019, there's a study that Forbes has produced, right? And in that study, it showed that with automation, Black and Latino workers are disproportionately impacted by automation, and that's really threatening their future across the world. So what you'll see is that, you know, that high proportion of our workers in our industry from that specific demographic tend to be in jobs that are ripe for automation, showing why you'll typically tend to see Black and Latino workers impacted by automation in this space. And that's a technology that organizations can get a lot of value from deploying throughout their work streams and throughout their value stream. But, you know, when you look at it from a DEI lens, there are real impacts that are being done to people with employees and customers in this segment. And even if you look at that third point around localizing granular data that's being leveraged across rate making and underwriting, and in other places like claims management and the insurance value chain, you know, that localized data could theoretically lead to things like risk classifications that exclude certain groups. While, you know, it's beneficial from the perspective of the insurer's risk management, right? It could really impact vulnerable populations of customers, but really also drive bias towards employees, right? But that is why, you know, even amongst what we're seeing with technology impacting the insurance industry, why it's so critically important to invest in DEI across all of insurance and all of insurtech, right? Because those examples that I just talked about, they're not made up examples, but they're things that we've been debating in our industry over the last decade. And really, there's been no real answer around supporting how to ensure that those things do not impact our ability to really hone in on serving our customers and employees in the insurance space. You know, really, when it comes to supporting and investing DEI in insurance. So, you know, as we look at the last couple of years, right, you know, the insurance industry itself has really stressed their commitment to DEI. I want to take you back to a study that was done and, you know, back with the House Committee in 2022. You know, with that committee, you know, it really explored DEI at some of the largest insurers. And what I want to tell you, you know, just in regards to what they found, it wasn't necessarily something that I believe that the industry should be proud of, right? You know, just look at those statistics that's in front of you. It shows that insurers overall had a large percentage of employees of color, or had a lower percentage of employees of color compared to their financial sector peers, right? So think about the investment banking world and other companies that are in the financial sectors, right? With people of color making up roughly about 21% of the industry in 2019, right? Now, when we look at women in the insurance industry, women make up roughly about 60% of the industry, but hold only 23% of executive officer seats, you know, at the vice president and above level, CEO, CFO, and COO. And in insurers with more than $7 billion in premiums, less than 16% of executives were people of color. You know, and that number dropped significantly in carriers of a smaller size. So in those same insurers, for every $100 in the insurance company's budget, 4 cents was spent on diversity, equity, and inclusion efforts. You know, with statistics like that, you could imagine why investing in DEI is so critically important for both insurance and for insurtech. You know, increasing that investment by just another 25 cents can have a significant benefit in preventing some of the challenges posed, that I talked about with the introduction of some of those technologies just a couple of moments ago. So when I think about things like how we got here, there's something that that as I looked and as I was doing some of the research, there has really never been a strategic business imperative to embrace more diversity, equity, and inclusion across the insurance industry. Where we think about, how insurance have treated DEI, it's been more treated like a project with limited commitments. And when times are rough, like during recessions, DEI teams tend to be more likely than others the first to become underfunded within that organization. And even over the last couple of years, insurers invested less than 1/10 of their budgets in comparison to other expenses. And when times are tough, right, those committed investments, they really tend to be placed on the back burner. But there is truly a stark difference with the insurer commitment, depending on where the insurers sit and what's known as the DEI and that DEI maturity model. So if you look at what's in front of you, Deloitte actually produced what's known as the DEI maturity model. And when you overlay the insurance industry's viewpoints, it could reflect how we tend to see insurer commitments to diversity, equity, and inclusion. And that really depends on where insurers may wind up model. And I got to tell you, insurers are all over the spectrum. Where it may have started as a mandate across some of the insurance organizations, it subsequently has to get to that point where it's transitioning from a mandate into a movement. Because some insurers never make it out of that mandate phase with very little progress made towards impacting real change. But out of the 4 levels, you see level 1, 2, 3, and 4. Level 1 being led by compliance and legal and DEI and HR teams, with level 2 being more programmatic and led by HR and the DEI teams. But where a real transition tends to happen is between that second level and between that sort of third level, right? And that's where that third level is leader-led, right? It's led by leaders in the organization, and they really want to focus their attention on leveling the playing field for all employees, where they can address systemic and cultural barriers. This is truly where a sophisticated understanding between the business drivers and the business value for diversity, equity, and inclusion really links to the company's overall strategy and support of DEI. Because where leaders are committed, the resistance in the enterprise doesn't force the enterprise to go back to the way that things were previously, right? Because that strategic business imperative that investing in DEI brings is true to the leader's understanding, right? So they're in that third level, that is truly where you're going to see progress and accountability, where it's going to be measured and where it's going to be managed relentlessly and transparently. And then when you shift to level 4, right, that is the integrated, where it's just completely integrated throughout your entire organization, right? And that's where you leverage the differences of the customers that are within your organizations, and it shows that real business value is being created. You can look at the workforce of insurers that are in that level, and it's generally and just cognitively diverse. It's visibly diverse, right? There's a shared sense of purpose and commitment. It shows that there are high-performing teams that's consistently driving higher revenues across those diverse organizations. And more importantly, what the organization is communicating externally is exactly matching that internal dialogue of these organizations. I just want to remind you, right, because a lot of people, as I started off with, don't necessarily see the business imperative of investing in DEI, but I want to remind you that DEI, it's good for business, right? And leaders, as I mentioned earlier, must be bold in championing DEI across both the insurtech and the insurance industries. So, if we go back to that congressional hearing, where we showed that organizations are investing minimum in DEI efforts while really showing minimum impacts based on what was being invested in. My belief is that the business imperative still hasn't been brought into, even though it's foundational to the success of organizations in this insurance space. But what if I told you that your revenue stands to outperform those of your peers who haven't necessarily invested in diversity, equity, inclusion, and belonging. Not only from a revenue standpoint, but from achieving cost savings through things like reduced attrition and absenteeism and even creating faster and less expensive recruiting. But, as a bonus, I want to remind you, investing in DEI contributes to your top line. As I think about there was a McKinsey report that was produced, and it was called Diversity Wins. And what that showed was that companies in the top quartile for gender diversity on their executive teams were 25%, get this, 25% more likely to experience above average profitability and 36% more likely to outperform on a profit margin for ethnic and cultural diversity that's in their organizations. Imagine what that can look like within the insurance industry. If diversity were to exist without equality and equity and inclusion, the industry is going to wind up falling short of those metrics that you see right in front of you. But I just want to make sure that you understand that, investing in DEI, it is going to continue to be good for business. I do want to say that I want to make no mistake about it. It's truly important, but I don't want to mince words. When I was preparing to deliver this keynote, I couldn't find one insurance industry success story of a company who invested more in the DEI efforts in 2020. Those that said they were going to do so with any metrics or KPIs around success and the outcomes of what they communicated during that time. For me, I spoke to past colleagues, I read APCIA documents, discussed it with current executives and CEOs across the insurance industry, and they weren't able to deliver upon a successful case study. I subsequently was able to have some fruitful discussions around what's happening in the insurtech space, and was reminded that insurtechs require diversity and talent, diversity of thought in their people, because they are focusing their attention not only on the present, but what they're seeing in the future. So what does this really mean for insurance technology, insurtech, and so on? There was a study that was conducted by the Berkeley Center for Equity and Leadership. And, what it found is that DEI drives about 5 key levers of financial performance. Remember what I mentioned, DEI it truly impacts and helps insurers increase their bottom line, right? But there are 5 key levers that were associated with financial performance that, if executed properly, insurers will be able to see some of those same benefits, right? More specifically around innovation, where it improves due to diversity of experiences from those workers. Really, as I mentioned a little bit earlier, increasing that top line revenue by about 19% just by having diverse leadership teams, and 45% more likely to be profitable with those organizations. And that isn't a small number, right? That's like giving yourself in your organization a 19% competitive advantage and a 45% advantage, from a profitability perspective, right? Even as you look at things like increased productivity with teammates engaging more productively with one another, right? Even things like improving retention in your organization due to job satisfaction from those diverse employees. Even when we think about the bottom line that DEI drives, diversity can improve that bottom line of companies and lead to an unfettered discoveries and breakthrough innovation, because you're not just focusing your attention on a homogenous space, but you're driving inclusiveness in your targets, which will ultimately attract talent, new partners, new customers that may have never considered your businesses before, right? Just a couple of other things that came out of that study was showing greater access to things like purchasing power through creating access to those underserved markets that's not traditionally reflected in the customer base due to diverse employees' connectivity to the segment, and an improved reputation. But the bottom line is the financial performance stands to improve by upwards of 36% due to cultural and ethnic diversity across your employee base. So, how does having the right talent in the right place at the right time lead to success? Making those commitments to DEI and advancements, you got to make that a business imperative, right? Because organizations that make DEI a strategic pillar and hold their leadership teams accountable to the outcomes are going to be much more successful, right? I have this saying, what gets tracked gets measured. And, creating a trackable metric, such as diverse hiring requirements, that's going to be something that helps the organizations, especially in our space that struggles with DEI, improve on their bottom line, right? You got to bring middle managers along for the ride, right? Because they do typically tend to control talent management. Insurance organizations that embrace DEI stand to get the benefit of that diversity of thought. But if the middle managers that are managing those diverse employees don't understand the business value and the drivers that investing in DEI brings to their organizations, because they're not coming along for the ride and they don't understand what inclusive leadership teams and capabilities mean, not going to be able to support longevity in maintaining those employees in your organization. And you really have to pay attention to your diverse talent and your diverse customers, right? Employees, if you do, they're gonna feel much more accepted and feel like they're at home in that environment that they're working in those organizations in our insurance segment that's embracing DEI. They're gonna be much more happy, much more engaged, and to the bottom line, it's gonna lead to much more outsized returns for your organization. So there truly is that business case for diversity, equity, inclusion, and technology and in this insurance space. But in closing, I just want to go back to some of those examples that I talked about a little bit earlier, right? With those technology advancements that were made and some of the adoptions that we've witnessed over the last 5 or so years. With that artificial intelligence, with the cognitive capabilities, we should start to see the AI train that have, from the perspective of broader experiences than just the homogenous view that we tend to see today in the insurance industry, and it could weed out potential bias in the algorithms. We should start to see organizations start to upskill employees that are impacted by things like automation, instead of moving them out of the organization, upskilling those employees to put them in greater positions to add value to your organizations. And even when we think about the granular set of data that's being used to flag, risk classifications and the underwriting and in the pricing process, that can potentially harm certain groups, we should start to see bias weeded out in that body of data that's being leveraged. I want to make sure that you all walk away with this thought. You have to understand that there's a clear link between diversity, equity, and inclusion and innovation in your organization. Homogenous teams tend to lack diversity of thought and stunts impact of growth and innovation. But when you bring those different experiences that can foster innovation that's needed to drive efforts, no longer will those efforts fall flat within your organization. You should see that bottom line, as I talked a little bit about earlier, start to improve and increase. There's still room to embrace DEI across all of insurance and insurtech, but organizations have to be willing to invest more to reap the rewards that can be gained through really committing to a diverse and equitable industry. It's not enough with those words that were mentioned back in 2020 to say you're committed to DEI, but you have to follow through and show real, tangible value coming out of those commitments that were made. Thank you all for the opportunity to talk to you about this topic that's very near and dear and important to my heart. I truly appreciate it.